Patrick. Hello, Eagles. TGIF, NFP Day. Let's have a great day. Everyone doing all right? I wanted to talk about Euro Pound, although I know the big story is this. S&P's down 75. Yeah, about 75 handles on the week. Pretty negative week. People hoping maybe the NFP saves it. I don't know. If I had big longs on this type of Friday, I'd be thinking about getting out of the way. So no guarantee they're going to reverse it today. You know, Blake showed the Euro Swiss giving warning signals. Steve's been talking about some of these extremely vertical angles were also a sign. And I've been saying Russell, Russell, Russell so much that maybe I'll name my next dog that, or get a Russell Terrier. Anyway, so that's a big story of today going into the NFP, but I want to talk a little bit about the Euro Pound here because, you know, I've traded both sides of it off this top. This is a weekly here, you know, and you had this huge down day, and I'm looking at it, and what's it waiting for to break down? I'm not saying that it can't, but what makes me think that there could be another wave to the upside? Anyone know? Anyone want to take a guess why I think there's potential for another move? The pattern looks incomplete to me. That's the answer. Here's one, here's two, and we still could get three. That could take it up to 94. Of course, that's off the table if we close under 86. I think even shorter term, it's acting okay. So, you know, is it going to be because the euro is going to be so strong and outperform the pound, which really hasn't been happening the last week or so? We've seen tremendous moves by the pound, but the pound really got up to a lot of long-term targets, and maybe people have become complacent about Brexit. So maybe it's going to be about pound weakness at least as much as the euro holding together. So I look at this and I think 94 is possible. I go the monthly. Here we are. This was a high. It was a confirmed high. But it looks like we could get some type of double top up here, up towards 94. To me, it looks friendly and incomplete. Okay, now yesterday in Aussie, we talked about the breakdown. Of course, I was looking for a third drive up here. It didn't happen. But then when we were here and the dollar was getting smashed, all we did was get back to the breakdown here. So we'll see what happens with Aussie now. And the Dxy, a little surprising that we didn't make a new low here. I'm not saying that we can't still make a new low. Came within, I think, about 15 pips on the week. I think it's a neutral week. Yeah, we have an inside week down. So it could be setting up for next week, where we take out this week's lows, maybe go to 88.10, 87.80, and then the most bullish thing the dollar could do would be to take out this week's low, the recent low, the move, early in the week, and then start taking out this week's high, which would take it back above 90, right? And then I think you have something, the correction to the upside could begin. So those are my views going into the NFP. I just have one other thing to say before I hand it over to Blake. You guys know I'm a big fan of the Traffic Light page. Yeah, if you're not a subscriber, you haven't seen it. I tweet about it all the time. I use Johnny Lang's song, "Don't Run Red Lights." Here's red lights. And all the great data that you get here. So I'm saying that this is, you know, a value. But you know what really is a value here? Guys, you're going on the Jumbotron. The live room that's monitored by Amanda, who does a great job in here. And if you like during the free webinar, Blake's analysis, I know that people do, our crowd swell when Blake is talking and Steve is talking, and they're in here a lot, right? Got Blake here, I'm in here. Stelios is here, Steve is here. I know you guys like to ask Steve questions. He spends a lot of time in here. Just being part of this chat room so that you're getting feedback for the rest of the day. And it's pretty active during a lot of different sessions here. And there are some great traders, pro traders in here. They trade for a living, and they're all for each other. It's a great community. They're all, you know, congratulate people, and if things aren't going well, they support people, remind them that, you know, it's just another trade. But this alone, I think, is worth the subscription price at least. So I encourage people that aren't getting enough just from face of an hour of analysis by, you know, a little by me, Blake, Steve, and Stell, and sometimes Greg pops in here, that you have all day coverage here to be able to interact in the private chat. Okay. Thank you, Andrew. Hi, Luca. I think, Luca, you're on next week. Please send me your send me a tweet so I have your Twitter handle and I could promote your interview next week. So that's it. I'm going to hand it over to Blake. I know he probably wants to get some things said before the number, but really, this is a great place to spend your day. Face is just kind of a taste of what you can experience all day long with usually at least 100 people in here. Okay.
What's happening, Dale?
Hey, Blake, how are you, buddy?
Good. I was TGIF.
Yeah.
You know, it's interesting. If I was just noticing Bitcoin in the big rally that we just had from the 200-day moving average. This is, you know, it's a Gartley completion too. You know, right. Well, close to here. We had it marked right here.
Probably the bottom, Blake.
Well, maybe for today. For today.
I know a lot of people were talking 8,000, 7,500 when we were, you know, well above 10,000. So
yeah, look, it's a triangle completion. It's the 200-day moving average. It's the, you know, you could roughly say Gartley. I mean, I'll tell you, if I was trading Bitcoin, which I'm not, but look, they were just waiting.
Wow. Yeah.
They were just waiting. And if I wouldn't be buying it now, I mean, it may continue higher from now. But you know, you had to be ready at the 200-day moving average. I mean, that was the thing. I mean, if you if you use ForexAnalytix, I mean, we've been sitting there talking about it for days. I mean, you know, the Bitcoin wherever. Bitcoin yesterday, Bitcoin pushed lower, breaking 9,000 mark. 200-day moving average is coming to view near 7,700, which looks like the first major support. And I mean, if you're like, okay, well, I'm going to buy it at, you know, support, then you got paid. Now, what do you do with it now? I mean, I don't know. I mean, we might get back up to like 9,000. Who knows? But I look at it as there'll probably be a near-term correction. Any type of reaction from a 200 period moving average, you're going to get the initial reaction first. If we're going to break a 200 period moving average, especially after a big move like this, it's probably going to have to come back and break on the second test if it's going to break. You know what I mean? So, but anyway, we don't need to spend all our time talking about Bitcoin. I just want to show you guys how, you know, it's actually one of the more pure markets because there's less algos involved. So it's, you know, run off emotions, and a lot of basic technical analysis will work, and that's why, you know, you had to be cognizant of these. Let's talk about non-farm payroll. First of all, ADP came in strong. I read a couple bank reports. Well, first of all, I've been reading bank reports for the last like 48 hours on NFP, but in all actuality, we're probably going to get a solid number. Not, you know, I would hope actually that we would get a really hot number. I doubt we're going to get a really hot number, which I think when I say really hot number, I mean, you know, when you're talking about a number that is, you know, looking at you know, 250,000 jobs or 300,000 jobs, that would be a really hot number, and the dollar would really benefit from that, I think, because then, you know, and plus we'd have to talk about, you know, the average hourly earnings going higher, which actually average hourly earnings, the market is expecting a little bit of a drop in average hourly earnings. But if we got a good solid average hourly earnings, a really good report, the dollar might actually turn a little bit. Now, if you look at the dollar index has been really confined by this downtrend line. It's green here, meaning that for me, it's like, okay, when it breaks that green line, it's time to be bullish. Until then, there's no real sense in it. But a really strong number might spook the markets a little bit. You might see, you know, the stock market actually come under a little bit of pressure, because people might start to think, hey, we need to price in, you know, 4 rate hikes versus 3, and it might adjust some thinking. Which I think it's a risk. You know, if you're thinking, man, I hope we just miss. I don't know if that's going to be the case. You know, we might come in a little light. We might come in, you know, 180,000 jobs or in line with expectations, but I actually expect a fairly hot number. I think this economy is running hot, and it's you know, this is we're starting to get to that point where the economy is getting, you know, so hot that the Fed might have to start to step in, and these higher rates that are going to make their way into the economy and slow the economy probably down markedly over the next 12 months or so. But because we're already seeing the 10-year approach 280 on yield, and the 30-year is above 3%, and those higher rates are going to slow down the economy eventually. But for right now, we've got a hot economy, and I think it's going to continue to stay that way. And the question is, well, how do you trade it? And I'm hoping we get a pretty hot number, because I'm looking at the dollar yen, and the dollar yen to me on a really strong number is going to spike us up towards 110. 110 and a quarter. This is a 38% retracement. You see this right here? It's a 38% retracement. It's also previous support. So I'm hoping we get a spike right up there. And I'd be looking to sell into that strength. Now, if you go, well, hey, Blake, if it's a strong number, why would I be looking to sell into strength here? And the reason why is because, as I mentioned to you guys, a strong number will be dollar bullish right now, okay? But the market might actually see it as a negative after the initial, spike up. So, stocks might get a spike higher on a good number. Everybody goes, oh, hey, the rip-roaring economy, hey, that's great. Stocks bounce, and then all of a sudden people start thinking, hey, wait, does that mean the Fed starts raising rates? And then that's where the yen takes over. Then the yen might start to strengthen a little bit. We might see that happen. And that's why I think that the dollar yen upside is fairly limited for today. Now, another thing I want to point out, and I tweeted the chart on the euro dollar, but let's talk about this. This is a multi-year trend line that's coming in on the euro. It comes in around 126. All right, because if we get a weak number, the euro is going to rally. The euro, if it's fairly weak, everything that we see here is bullish. We're breaking out of a triangle. It's a continuation pattern. We talked about this yesterday. They tend to break higher. We did break higher. And as long as we stay above 124, there's really no reason to be bearish the euro dollar at this point in time. But I do have to point out that we are at a 38% retracement of that big move too. So if you look at the, this big multi-year trend line, we're at a 38% retracement right now, like basically at 125.30. And we have this big downsloping trend line that's, about 60 to 80 pips higher, depending on how you're going to draw it. This is not perfect by any stretch of the means, and the market, I look at this big trend line as more of a zone rather than an actual, specific price. It's just, we get it up towards 126 or maybe the high 125s, and you got to know that you're within proximity of this trend line. So, obviously you got to be a little careful there. But I don't see any real slowing for the euro dollar right now. I mean, the euro dollar is just extremely bullish, and until proven otherwise, and until we break below this green line, which comes in at 124 today, there's really no reason to be bearish the euro. We have divergent relative strength and overbought and blah blah blah. You can make all those arguments, but overbought can be more overboughter. So I don't think that you should necessarily sell the euro here or short the euro right here, especially ahead of non-farm payroll, which is never a good idea anyway. Just knowing that that we have a number that's questionable coming out. You look at the cable. Cable's had a nice recovery, but I don't know what to do with the pound. I mean, that's just all I know is while it's above 140, I don't want to be short. That's pretty much, that's all I have to say about that. It's like, okay, well, it's had a great bounce. Great. If you captured it, fantastic. If you missed it, is it time to short? I mean, we might be forging a lower high, but it's still, still making grounds, post Brexit moves. So, and we've almost, completely filled that gap or gone back to pre-Brexit levels, which would be in the high 140s. We're getting there. We're getting close, but it doesn't mean we can't continue higher. The currencies that I'm really more interested in are like the commodity currencies. The Aussie has broken this up channel. We've been talking about it for the last couple of days. Yesterday was a pretty good move, because what happened is we broke out of the channel. We came back and retested the breakdown point and previous support and reversed there, just like it should. But that doesn't mean that we can't come back up here again. I'd be more interested in selling the Aussie on a rally now versus buying a dip. This is a 50% retracement right now, but a move back up to 80.50 is probably a better opportunity to be on the short side. Okay, let's take a look at the Kiwi. Kiwi is still very messy. Actually, you could probably argue that we're in some sort of triangle consolidation. It looks like that, I think, but it's still pretty elevated. I would think that the New Zealand dollar is a decent short if rates continue to move higher, because what happens is when you have higher rates, that what that does is that's going to have people shift money out of more riskier assets, higher yielding assets, as they have other options, and the New Zealand dollar probably suffer as a result. It hasn't shown me just yet that it's time to reverse. I've been selling the Kiwi on rallies, and it's been a frustrating trade, but I will continue to do so as long as stocks stay weak. That I will do. Oh, you know what we should do right now? Let's take a look at the euro yen. I'm specifically looking at the euro yen because we're reaching higher. We're about ready to hit 127% extension. Comes in at 137.50. I think this is going to be really pretty key resistance for the euro yen. I haven't really been trading the euro yen much, but I think that we might find some resistance up here. This would kind of coincide with the euro dollar getting back above 125, dollar yen at 110.25. If that all happens, coincides together, we'll be at 137. We'll be at 137.50 or 138 in fairly short order. But I don't know. It's getting kind of lofty here, and it's looking a little extended. The dollar Canadian is in a descending wedge. Now, I know I've been saying this, and I'll say it again. If we're going to see a dollar bounce, if we're really going to see like a significant dollar bounce, like where the dollar actually looks like we're going to recover, we're probably going to see it in the dollar Canadian first. Now, I do think the dollar Canadian's upside is limited. I don't look at the dollar Canadian going, okay, we're going back to 130. And the reason why I say that is because I think that any NAFTA agreement is going to be, it's going to be an agreement, but it's probably going to favor Mexico and Canada a little bit. People. It's not going to be the U.S. is walking out on NAFTA. So I think that the Canadian and Mexican peso, even though these two currencies, and talking about the Canadian right now, might recover a little bit, I think the Canadian might have a little bit of a tailwind due to some sort of agreement getting made. The only thing that would really dissuade me from being on the short side of the dollar or wanting to be extremely short the dollar Canadian or extremely long the dollar Canadian is if the U.S. actually backed out of NAFTA. Then I would be buying dollar Canadian probably hand over foot. I'd be trying to aggressively get long, but I think that this descending wedge might give us an opportunity, for a move maybe back up to 124.50, maybe a move back up to 125 that might find some better places to be on the short side. But I am looking for a possible reversal here. And let's talk about the dollar index. Again, the dollar index is in a wedge. Now, let's make sure that we point out a couple of key levels that we're at. Okay, so if you look at the 2017, the last move that we had in 2017, we're at 161% extension. That is holding. And as long as that holds, the risk of a dollar squeeze is high. If the US dollar index breaks down from here, it's going to be ugly. It really is. And one thing that's kind of scary right now is the dollar is just not responsive to yields. That has completely broken down. So the dollar index, I worry about it if we break into new lows, but there is the risk for a possible squeeze. But we have to get above 89. And until we get above 89, I'm not confident in a squeeze. We get above 89, we could probably squeeze to 90 fairly quickly. I think that a move right back up to here could happen based on positioning of how aggressively long people are of the euro, how the big moves that we've seen since December, and the pound, the Kiwi, the Aussie. I think the dollars, the Nordic currencies, the dollar is primed for a squeeze, but that doesn't mean it's going to happen just because we think, the dollar is oversold and it's at support. That doesn't mean that the dollar has to squeeze higher. I think the risk is there, and I know that buying dollars has been a very frustrating trade, and I've managed to keep my head afloat, trying to pick up dollars on the cheap, but I'm not really convinced about that. And you have to be very nimble while we're still in a very bearish trend. We have to get above 89 to really convince me, and I would say the market, that there's any type of bounce coming. But any type of bounce could be aggressive just because of the oversold nature of the dollar and positioning and whatnot. But with that being said, I've got to get ready for non-farm payroll. I hope you guys have a great NFP today, and like I said, I'm looking at the, you know, the dollar yen at 110.25. Not really too sure what to do with the euro, but you know, as long you know, it spikes above the highs and above like 125.30, I'll be looking at kind of with a little skepticism. And with that being said, I want to pass it over to my colleague Steve, and Stelio should be here, and Dale. Hey guys, are you there? Hey, good morning.
I'm definitely here. How have you been?
Still here.
I'm here too.
Great review, Blake.
Hey, thanks. And I want to first of all, before I go, I have to leave here in just a minute, but I want to say thank you guys and gals for those of you that have supported us with the FX Street Awards. The polls are closed, so if you didn't vote, I'm sorry that you didn't vote. But for those of you that did, I really thank you for supporting us and supporting our company and supporting, you know, these webinars. I know they're free, and I know a lot of you guys, hundreds and hundreds of you guys every morning enjoy it. So thank you very much for being part of our family. Yep.
Jinx.
All right. Jinx.
Good
Jinx,
hunting,
right.
buddy.
Thanks, and to you guys. And thank God it's Friday.
Yeah, I'm with you.
All right.
Bro. All right.
See you
Hey,
guys.
see you.
Good luck.
How are you feeling? How you
Good
feeling,
luck to you
brother?
guys. Thanks.
You too, buddy. How you feeling, Steve?
I'm quite a lot better actually, Dale. Thank you. How are you?
I'm great, man. You know what? I'm like a diamond. I'm shining so bright today. You better put on your shades.
Okay, then you'll have to give me 30 seconds to bring them because they're at the next room.
Loving this, you know, S&P's being down 80 handles on the week. Loving it.
You know something, we said it that, you know, it was a matter of time for that to happen. I mean, that rate of appreciation was completely unsustainable. The question always in this case is, okay, what happens from here? We're still not seeing, we're still not seeing an impulsive characteristics. I mean, now, if we get a catalyst and we actually get some acceleration to the downside, then, you know, and the ball starts rolling, then it's going to be a totally different story.
But if you look at the weekly, what do you do with the weekly candle?
That's definitely a very bearish candle, but unfortunately, you know, the US stock indices are so artificially bid that oppositely to what we've usually seen, you know, in normal
new highs after the NFP.
Yeah, in normal markets, if you had a candle such as the one we have now in the weekly, as you mentioned, after such a run higher, the natural thing to happen from here would be to see a bigger sell-off, simply because people that were riding the uptrend would be like, okay, you know, this was a nice move higher, this was a nice profit.
At least 23% pullback, you know.
Yeah, I mean, everybody would be okay. This was a nice run. This was good money made. Okay, time to book some profits and look for a buying opportunity, you know, lower from here. And that on itself, I mean, the psychology and the mentality of the investor would definitely lead to a deeper correction. I mean, if these were normal days and normal circumstances, you could easily see a healthy correction down to 2,700, right? I mean, even if we see it on a daily basis, which is, you know, more clearly in the short term, I mean, we should at least see, after such a move, you know, at least a pullback to the first support area at 2,700. But, you know, with this market being what it is,
that's what
you can never be. Yeah, you can never be sure about that. I can tell you one thing for sure, though, is that the DAX went under pressure first, got rejected from the megaphone formation, and is showing a lot more impulsive characteristics to the downside. Of course, first of all, we need to close below 12,900 for the first time in a long period of time. I mean, this zone. And second of all, we need to break below this formation. So until that happens,
we have numbers coming out right now.
Yeah, I know. Okay, let's see what it is. I think the market expects 100 and
Oh, 200.
Okay, 200.
Headline.
So it's a bit. 200. Yeah, it's a bit indeed.
Yeah, and the
Okay,
revision
let's
higher
see
as
how.
well. Yeah.
How
Average
much was
weekly
the previous
earnings.
one revised?
I
Revised, sorry.
don't know.
It
I
was
don't know.
140 something that we had. Okay, the dollar yen is quite.
Average hourly earnings in line, revised higher. So overall, not bad numbers, a good numbers.
Overall, quite good. Actually, we can already see the response to USD yen, which is currently hitting previous area of support as resistance. So we need to see what's going to happen from here. 110.20. Average hourly earnings 2.9% year on year versus 2.6. I see, Stelio. Yep. Most since
I'm looking at the monthly reading.
US average hourly earnings rose 2.9 year on year, most since 2009. So this is the first indication of inflationary pressure that we see here.
Yeah.
Of potential inflation. So the number is very, very good, and we see a very, very strong response actually, at least in the USD yen. USD MXN is also showing a response here. Let's see what gold is doing.
Janet Yellen is breathing a sigh of relief.
Gold is dumping. I think this is quite a bullish print. Unemployment, by the way, stays at 4.1. Can you find me the participation rate? Is it the same? What is it?
It is unchanged at 62.7, so it's the same.
Okay. So whoop, and there are the alerts. Let's have a look at USD CAD. Yep, USD CAD is showing quite a reversal potential. Blake had already shown this descending wedge potential, but for me it's all about the 124.20 level. So ultimate confirmation of a move higher from here is going to come on a break from there, and in my opinion then it's all going to be about 26.60 as a resistance. So if we actually penetrate 124.20, we can easily see a retest of 126.60. There is upside from there. Yeah, okay, I get confirmation now on all the numbers. 200K versus 180, previous revised to 160 from 148, unemployment rate unchanged, as you said, participation rate unchanged, but average hourly earnings 2.9, which is a 9-year high. So quite a strong print actually, especially considering I think we are on a record of positive payrolls, Stelio, right?
What do you mean record of positive payrolls? What do you mean
in terms of how many we've had in a row?
Oh, in a row. Very likely. I have to check that, but yes.
Yeah. By the way, finally the Aussie is working. Yesterday, as I said, I added to my Aussie position back to full. So as you see, this is a significant break here. Next area of support is down at 79. Below there, you should be checking for 78.10. Let's have a look at Kiwi if it's finally responding to it. Yep, Kiwi is also once again lower, testing currently the 73.20 level. This has been support for several days. We haven't managed to close below it. If we actually do close below it, especially if we break below this trend line, then the Kiwi should start showing some follow through as well. I can say that the cable is also moving lower in the euro, but keep that in mind and in context that despite the strong dollar move, we're not seeing like excessive moves here. Actually, I would say that especially against the euro, we see a very, very, very muted reaction. Of course, there's going to be some kind of a reaction because the dollar is bid all over the board, and let's see how. Whoa, yeah. S&P is not responding positively to that. I think that finally the stock market is starting to realize that rates do matter, and the rates are probably going to be moving higher from here, and probably the market is going to now start repricing how many rate hikes we're going to be seeing, especially since the whole rhetoric about keeping a loose monetary policy was inflation. And even from the traditional Phillips curve, we know that inflation is very, very highly correlated to wages, and we're finally seeing some upside pressure there. So the stock market might have a bad day following that. Okay, USD CAD is actually picking up even further in strength. We also had RSI divergence here, as you can see, a reliable one. Previous print was below 30. This one was more or less right at 30. So in general, let's go to the Dxy Index. We said it many times. There was no risk reward anymore to be short the dollar, because even if we saw more downside, you know, there was always the potential that we're going to see some sharp rally, and today's NFPs might prove to be that. We have still held the zone that we were mentioning, that is, you know, a huge area of confluence of supports. And if we actually break above this descending channel, that's going to be the first step that we need to see. The second one is going to be breaking above 910 previous support area, and then it's all about the 91 level. If we actually make it to there and we break above 91, which was also that low, then things will get more serious. And in my opinion, that is the point at which we might see dollar strength actually accelerating. So it's all about 91 in my opinion, because after that we might see, you know, a very one-sided market having to run the opposite direction. Okay, I'm not trying to jump the gun here. I'm just giving you you know, a look ahead guide and you know, some potentials here. There's not a question it's going to happen at some point. I mean, seeing a big reaction from the dollar higher doesn't mean it's going to be now, but you know, this event might end up being the catalyst. We're going to find out very soon. Okay, let's have a look at the USD yen once again. Let's see what it's going to do with this resistance. We've still not broken really above it, as you see, but we're testing it. So actually, if we break above this resistance, then it's all going to be about retesting this area here, 111.50 roughly. There it is. But only if we break above here, because if we get a rejection for some reason from there, then there's no question USD yen remains bearish. I mean, just think about it. This is just the first resistance area, right? So we really need to be able to scale it if we want to be talking about any dollar strength coming through this currency pair. Otherwise, there is nothing to discuss. So it's a key level here. I'm not saying that it's going to hold. Actually, if we see this dollar strength accelerating, it's definitely not going to hold. But it's definitely, you know, if you're bearish, you really want to see this level getting defended. By the way, the head and shoulders formation that we were marking here has not been completed because the target coincides with that low that we had there, is at 107.30-35. Okay, we're seeing, you know, the dollar take a breather here, but we need to see if it's going to push higher once again. For the time being, the market seems to be best wage growth since the crisis. Yeah, I'm just seeing tweets as well. It's what I told you before. This is the highest number we've seen since 2009, actually, yes. And actually the first half of 2009, if I'm not mistaken. So yeah, this is almost a decade high. The market is definitely gonna take notice of that. Don't you agree, Stelio?
I agree 100%, my friend.
The plunge protection team was disbanded by Janet Yellen, and Paul hasn't put his team together yet.
Okay, we'll have to see about it. Let's see what the USD Swiss is doing actually. USD Swiss, this is what we had marked the other day. We said when we broke below there that the next target is the 127.2 here, and as you see, yesterday we closed right on top of it. Today we're rebounding from there. USD Swiss, obviously any rebound from here, we will have to scale this. I'm going to zoom out so you can see how important it is. It's going to have to scale this Previous support should now act as resistance, call it at 0.9440, if we are to talk about anything of significance. Until then, this is just a rebound in a bearish trend. Okay, so keep in mind, any rebound from here, you should really closely monitor what's going to happen to 0.9440. That area has, a high potential of rejecting price action, but we can easily see a push towards there. By the way, the USD CAD remains one of the best beta. I mean, others are pulling back a little bit. This one is one of the best behaving so far. We've already seen a 100 pip move from the lows of the day, 100 plus now, and as Blake indicated, and very early before the NFPs, this has a very good reversal potential. But as I said, watch 124 to 124.20. I don't know if we're going to be so strong today to move even above that. But during the next week, this is a very interesting area to be watching. If we break above it, I think there is a lot more upside, at least towards 126.60. I think that's going to be quite a good trade. Let's have a look again at the Aussie. Okay, Aussie at the lows of the day as well. Okay, this thing is working nicely, finally. You remember, Dale, how clearly we had said why we remain stubbornly bearish on this pair and how important this confluence of resistances was, and as it seems, it did the trick for now.
Yeah, and there are plenty of opportunities, and that's why I stress people being in the private chat room for subscribers, because there was that rally back when the dollar was getting pummeled late in the session. The rally back to 80.40 was a gift.
Yep.
It was the only currencies, one of the only currencies that couldn't go higher on the day yesterday, while the dollar was getting smashed. And I'm sure you were in there talking about it.
Yeah. But the good thing about the chat room is that we talk about a lot of things, from making fun or telling stories, but a lot about markets as well. So it's a very friendly environment that you can talk the markets, talk about other things as well, and
great ideas that happen outside of our webinar hour.
Yeah, and almost everybody there. I mean, we have a lot of active members now, and are sharing what they're doing, what they're seeing, and it helps a lot, because it's like having multiple pairs of eyes. And I have to tell you something. I was a little bit skeptical at the beginning with the chat room, because you never know with people. But it's been months now that we're running it. We haven't had even a single incidence of any person being impolite or whatever. It's an amazing environment with very mature people.
People that know me know I'm a big believer in social trading, and you brought up that point, the fact that we only have two eyes. So I used to be able to walk in and not have one idea, and through the community in 20 minutes, I had several compelling setups to consider, and that's how this is working too. So
that is very true. By the way, keep in mind that in general, European indices seem to be watching and starting to care about what's happening with rates. As you see, it's the vast majority of indices that are moving lower the past few days, and I think that there is the potential that we might see some follow through in US stocks as well. US stocks, by the way, are currently testing this previous trend line resistance and support. Also, that the round level 2,800 is obviously should play some psychological role as well. So I think today it's an important day. We need to see if they're actually going to protect this level, despite the indications that the market has definitely mispricing the potential future of how the Fed is going to move from here. So let's see if the market is going to just simply dismiss that, or it's actually going to start, caring more, as in my opinion it should, about what's happening. Anyhow, I'm not seeing anything really, happening after the initial reaction. Probably the market needs to take a breather before it resumes. So I think it's a good opportunity for us to have a look at a few questions. And of course, Delio, if something moves that I don't notice, just let me know. Huh?
Of course, of course. What I was looking at today was the 10-year treasuries, and they've just broken above a channel which is running for like 20 years.
Yields, you mean Delio or treasuries?
Yields, yeah, sorry, yields. I mean, yes. It's.
Oh yeah, the descending. You mean the descending channel, huh?
The descending channel since like 1994, as far back as the trading view will show me, it goes as far back as then, and it just broke. And it's just, I personally think it's
in the shorter term we had also broken. This is a much shorter term. We had also broken some time ago above this descending channel. This is a much shorter term view, and if you see at the treasuries, I mean not the yields, the treasuries, we said plenty of times, that this was a corrective pattern. And you see what's happening after we broke below it, right? I mean, a move that started slowly is now accelerating to the downside. And you know something? Bonds always matter. I mean, the market might be trying to dismiss the move we're seeing here, but in my opinion, that would be a huge mistake. A huge mistake.
And combine that with bonds having broken huge support as well. It's
159. Yeah.
Yes, exactly.
Yeah, the Boon move is also indicative here.
Yeah.
Here it is. This was a major level. It was holding for a long period of time, and in a very well established long-term uptrend. Just look at it. I mean, Boons for years had only one direction they were moving. Just look at this chart, up, and suddenly, people start realizing that, oops, there might be another direction here. My opinion, any pullback,
should be sold. Yeah,
towards there should be immediately sold. I mean, this market is extremely bearish at the moment. We were monitoring this diamond formation for a long period of time, and we had said that the chances are for at least one more move lower, and as long as the market remained below there for macro reasons, we would like to be seeing a move lower. I remember having conversations with Luca. Both of us were looking for a move lower in the Boons, but they were stubbornly, I mean, just look at this move, bid, just look at this move. They were stubbornly bid on occasions when there was no fundamental reasons for that to happen. And suddenly the market, wakes up and realizes that, the ECB is probably on a tightening path as well. The Eurozone economy is doing much better than it was doing. So obviously, sooner or later, the monetary policy should reverse theirs as well, and boom, that's what happens.
Yeah, I've seen comments from people saying, "Oh, bonds have dropped a lot. So maybe it's worth, they should be bought for a leg higher." And I take a step back and I say, look at the yields, 10-year, bonds. Where's the yield? 75 basis points or 80 or whatever it is now. It's still like below 1% on the 10-year.
Yeah, it's ridiculous.
It's in the grand scheme of things, if you look at the long-term average, it's as well, pretty much all-time lows. I mean, it's very close to that. So
yeah, if you look, let's say, at the 50-year chart, you won't even realize we're off the lows. That's very true, actually.
Of course, we have moved globally to lower yields overall, but still, these are levels where
this is a chart from Ronit, by the way. He says he says the same thing. Bonds matter, of course they do, absolutely. And I think there is a discussion about it, and I think that's actually very right. There's a discussion about that we have seen the same path in 1970. We had before the market crash then, that we were seeing yields appreciating in a fast pace, and initially the market, I mean the stock market's not giving a dime about that, and everybody's saying don't worry about the yields, don't worry about the yields, everything is going to be okay. And guess what? Everything was not going to be okay in the end. Yeah, Ron, it says 95 to 97, exactly, and same 1931, exactly. And you know, it always ended in the same way, and there are a lot of similarities here that should at least worry a little bit people that are longer term bullish. And you know, there is a saying that always stocks are the last to take notice of something that's happening. Usually bonds react first to something, then FX, and very often stocks react with a big delay.
Yes, I call that disintermediation between the bonds and the equities.
Yeah.
Which, you know, has been going on for a while. I mean, you look at the bond low yields, they were made over 2
I mean, I don't know the guy, but I've been seeing him, Kaskari, you know, the Fed's official. He says continuing wage growth could impact rates. I mean, come on, honestly.
And he's a dove.
Yeah, no. My point is the following. I mean, this guy. First of all, I don't understand this guy. I think that he's so much behind the curve, even in the way he's thinking. He's a dangerous guy to the.
Steve, you know the world. It's who you know, not what you know.
Yeah, but I mean, this guy is dangerous. I mean, this guy and guys that think like him is what ends up making the central banks creating one bubble after the other, and then creating another bubble to try to bring the economy out of the stall that happened due to the previous bubble, and over again. And I mean, you know, he's now making a statement that if you if you put your feet in any university, doing like economics 101, you know, it's self-explained. I mean, self-explanatory. I really don't understand this guy. I mean, what else does he want to see to, you know, to start considering that, you know, the Fed is seriously behind the curve. I really don't understand this guy. Anyhow, USD CAD is pushing highs of the day once again. From what I see here, 123.70 has already been penetrated. So we're already like 110 pips of the lows. As it seems that DXY, Euro is responding a little bit more as well. So let's see, because let's have a look at the DXY once again, and let's have a look at the weekly chart. Look at this.
Inside week.
Yeah, inside week for now, but look at where we also found support here, right? Yeah, 61.8 of the big move.
It's an inside week, neutral.
Yeah.
Right? Candlestick, inside week.
Yep.
Okay.
But this is a nice level, regardless. We tested the 61.8 of this move higher.
Yeah, and they couldn't take it out. They tried to take it out. I think they were, what, within 10, 15 points.
Yeah, this is a nice
out before or on the NFP and turn it, but it happened before the NFP.
Yeah, this is a nice level for the dollar index to find support. We'll see. I think this next week are going to be quite important. We might finally start seeing some volatility and some two-way price action, because, I mean, until a few days ago, this was completely absent from these markets. I mean, the first 4 weeks of January were just a joke. I very rarely remember in my years of experience such a joke markets. I mean, they weren't even markets, because markets, you know, involve somewhat of a binary price action, and we had nothing of that. It was every single day selling the dollar, buying stocks, selling the dollar, buying stocks, no matter what came out, no matter. The market was just blindly selling dollars, buying stocks.
Steve, my guest today had to cancel he's with Nordea and he didn't get the green light from compliance.
Oh, okay. I like them, by the way. They're a good bank, and they. When I used to have the time to read some bank analysis, I did read theirs. They did a decent job, actually. Too bad. It's okay.
So I don't know if you want to just hang around or go into the private chat, give everyone who's still here a chance to sign up, and then meet you in the chat for the, S&P session and everything else. It's up to you.
Yes, Steve, if markets, we have a question, Stelio. Dave asks, Steve, if markets are forward-looking discounting mechanism, isn't the bond market projecting a stronger economy? Yes, in a sense. It depends on how you say it. The market projects at the moment that rates are going to rise. Now, the question here is the following. Do we have an economy that can actually handle this, the normalization, and go through a normal process? That's the first question. I have some doubts about that.
It could be supply. Rates go up for different reasons, not just a strong economy. How about supply? How about the new tax package putting in more supply? And how about the dollar having been weak? I mean, you could go to all kinds of third world countries whose economies are collapsing and rates go up to prevent capital outflows.
Yeah, in this case, of course, that's not the case with the US. I mean, rates are not going up to prevent capital outflows. But the question is, Dave, is the recovery of the economy standing on solid feet, or is it just standing on a financial asset appreciation? And if we get a reversal of that trend, so for example, let's say stock markets start getting scared about extremely loose monetary conditions reversing, okay? And let's say that financial assets start correcting lower. Do you believe that this will matter the same as it would matter like 30 or 40 years ago to the economy? Because I'm afraid that a big part of the recovery, instead of the financial markets showing and in essence mirroring the state of the economy, we've built an economy that more or less the opposite is happening. Whenever we manage to make financial assets be frothy, the economy seems to be doing good, but whenever financial assets suffer, the economy starts doing bad. While the cycle should be completely opposite. A healthy economy should also bring decently frothy financial assets, and not financial assets, so it's like having put the cart in front of the horse. And that's what I'm a little bit afraid of here, I have to tell you. Other than that, your comment, general, under normal circumstances, is correct. Ronit says, and one more time, 93 to 94, where Greenspan raised it. So bonds matter, stocks react late. Yield spike, dollar spike. That is the cue for the crisis. Banks are down, and DB Bank also is down hard. It's late, but it will react once you have assets going down. Oh, yeah, that's what I said as well. Okay, we have a question about Pound Doge and Pound Kiwi. Let's have a look at them. Okay, nothing really has changed here. We've penetrated this area, so expect 176.57 to be support from this point on. I think that, a retest of this area should bring another leg to the upside. Okay, I think no reason not to view it under a bullish lens from this point on. On the other hand, as you see, the Pound Kiwi is underperforming. Still, though, as long as this area is holding, right, I think you can also try your luck to the upside. So, especially if we break above 194.30, I think it's probably even going to new highs. Regardless, if as long as 190.60, 50, let's call it, holds, I think it's doing good. It's doing good. It held the major trend line that it was supposed to hold, despite breaking below it like for a single day. So that was probably a false break. At least that's how you can view it. Okay, USD NOK is reversing as well. Let's have a look at it.
Yeah, get all kinds of alarms, man.
There we go.
There it is.
It seems to be finding trying to be finding new lows, but I've been
You still there, Stevie?
Come on, sing it. Stelio?
It ain't nothing
I'm
but
here,
a
yes.
drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. But don't be scared if you still believe the call. Don't try to be perfect, that would be a lie. Don't try to be perfect, cause that would be a lie. Be better than most and look me in the eye. Watch face fly, it ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. So don't be worried if you still believe the call.
I thought it would be so don't worry if you still believe in gold. But okay.
Anyway,
Okay,
really,
so bottom line before we wrap up and wish you all a good weekend is
yes, Steve, great week, man. Nice calls, great calls by the team. You know, I tweeted Steve that every time I'm interviewed, people are interviewing me, and I can't stop myself from bragging about the team. You know, so it's because it's true, it's authentic, and it's really. I've become a better trader being with you guys for 10 months. I see things more clearly than I ever have in my whole career.
Yeah, it's been a great pleasure having you.
And a nice run. Nice 10-month run, everybody. All right, so yeah, have a great weekend.
Stelio, we have a question for Stelio first.
Oh, okay. Who do you guys want to win it? Are you guys in Greece going to watch the Super Bowl?
No, personally, I'm not.
No? Okay.
I barely have time to watch through
the bathroom? Okay, I thought maybe you could bring, like Blake does, your iPad into the bathroom and watch it. Okay.
Stelio, there is a question from William. Greetings. Is Stelio's rebuying silver? Thanks.
Yes, I am actually still long silver. So currently with today's move, I'm roughly at break even, maybe slightly below. But my medium-term view on silver is still bullish. No matter what happens with the dollar, with rates, you know, I'm looking at real rates, and real rates in principle are going sideways. So inflation is rising, and also rates are rising. So I mean, interest rates are rising. So in principle, my thesis for being long silver is still intact, and I still like it, and I still own it. So I'm sticking with that at the moment. I'm not adding, but I am sticking with what I have.
Silver is in a consolidation for the past few weeks, and you know, I don't really see something strong. But if we see a daily close below 1680, we might see more weakness from there in the short term, at least.
You know the saying, Stel, the bigger the base, the bigger the launch into space. And this has been one hell of a base.
Yeah,
so,
yeah. It's been a long time, though. It's frustrating because it's very slow and it's moving sideways for months now. But
right.
You know, it takes a bit of
17 is key. It can fall to 10.5. I can tell you one thing for sure, mate.
Oh, I'm buying loads of 10.5.
Yeah, at 10.5, I'll start selling real assets to buy silver, honestly.
Yeah. Anyway, yeah.
All right. Well, everyone have a great weekend. Don't just count your pips, count your blessings.
Yeah, and be careful because today, keep in mind, today is the 2nd of February. The 2nd of February. We've talked about a lot of times about seasonality. You remember how many times I said that perhaps Friday, which is also,
Right.
you know, the end of the week, and in essence, let's say the very beginning of the month, it's okay, first, second, whatever. You know, it's a good day. It's a good day to see, you know, reversals and new trends arise. So, you know, let's be particularly careful and monitor what's going to happen today, because it might bring an interesting February. Okay. Have a wonderful weekend, everybody.
I guarantee that. All right. So have a great weekend, everybody. Thank you, Stell. Thank you, Steve. Thank you, Blake. Thank you, Grega. Thank you, everyone in the private chat room, for being generous with your ideas and supporting each other. And thank you, Amanda, for doing a great job running it. So I'll see everyone Monday. Have a great weekend. Good hunting the rest of the day. And I think I already said it, but I'll say it again. Don't just count your pips, count your blessings. And people aren't mind readers. Tell them how you feel. Talk to you later.